Hi, I'm John Mayfield, the Real Estate Tech Guy, with another Global Real Estate School podcast. Welcome to the podcast. My name is John Mayfield, the Real Estate Tech Guy, and this is episode 081. Well, on our last podcast, we talked about the dangers and pitfalls of a reverse annuity mortgage. And I thought over the next few weeks we would kind of stay in the financing portion for our podcast and discuss some of the different types of mortgages that are available. And had one of my students recently, she sent me an email and said, I'm looking at this shared appreciation mortgage. I did a Google search. There's nothing online. And I talked to a loan officer. And she said, my loan officer's never heard of a shared appreciation mortgage. And I thought, well, that's weird because I've seen this a lot in many textbooks and have taught about it, very familiar with it. So I did a Google search, and lo and behold, I came up with several definitions for a SAM mortgage, is what we call it, a shared appreciation mortgage, and several YouTube videos. So anyway, I'm not certain why she was not able to pull up a shared appreciation mortgage. And I'm probably certain why her loan officer had never heard of a shared appreciation mortgage. Now, first of all, you probably may not see this on the real estate exam because it's not very prevalent today. Keep in mind, I obtained my real estate license in 1978 at the age of 18. Some of you I know are trying to calculate how old I am, but this is like my 41st year as a real estate professional. And back in the early 1980s, right after I received my real estate license, interest rates took a hike. They went up. Now, it's interesting to note that interest rates now, we've seen 3 to 4%, even lower than that. I've never seen that in my lifetime as a real estate professional. When I got in the business back in the late 1970s, interest rates were 8, 9, 7%, kind of in that area. And then in the early 80s, they moved up into the 11, 12% range. And then I actually saw interest rates for 19 and 20%. And I remember closing on several real estate loans as a newly licensed real estate agent. I guess newly licensed, at least for only having my license for a few years. But I remember seeing people get mortgages for 18, 19% interest rates. I mean, it was ridiculous. It was so high. I remember refinancing a home that I owned and getting a 12% interest rate. And I was so excited driving back from the bank that day because I had literally gotten this 12% mortgage rate. And so we have to kind of go back for a shared appreciation mortgage and look at that time period. And so what basically would happen under a shared appreciation mortgage is that a lender may give you a lower interest rate in exchange to share in the appreciation of your home's value. Now, keep in mind, in California, Florida, some places, property values can appreciate very rapidly. I remember just a few years ago when the market was down in Florida, you could purchase a home in Florida in this specific area, a nice home for under $200,000. I mean, prices had really gone dramatically low. And then after 1 or 2 years, the market starts bouncing back. Those same houses were selling for $450,000. So you can see how appreciation in some areas can be very, very rapid and quick. And in those examples, if interest rates were, let's say, 10%, 12%, the lender may say, hey, I'll give you a 6% interest rate It's much better than 12%, the current rate today. But in exchange, I want to share in any appreciation of your mortgage. Now, there's tons of calculations and probably statistical formulas that have to be applied, similar to the way they value what they're going to charge you for insurance, the probability of this, that, or the other. And you don't need to know any of that for the real estate exam. But what you do need to know, if you were to see a question like this, is that a shared appreciation mortgage, also called a SAM mortgage, shared appreciation mortgage, a SAM, I should say, is nothing more than the lender giving you a lower interest rate in exchange for some of the appreciation or the profits from the value of your home over the length of time. So nothing real major. Probably you won't see that on the exam, but hey, you never know. And if you do, hopefully you know what that is and you can get that question correctly. So don't forget globalrealestateschool.com. We have lots of practice material to help you pass the examination on the first attempt. If you are in Oklahoma, Kansas, South Dakota, Missouri, we are approved. We would love to have you as a student, and we appreciate you listening to the podcast. Give us a great comment if you would, and a 5-star review. We would appreciate that. As always, thanks for listening to the podcast. I hope you make it a great day. Thank you for listening to the podcast for Global Real Estate School. I'm John Mayfield, the Real Estate Tech Guy. Go out and make it a great day.